The way that investors look at projections is through a metaphor that I think is very helpful to understand as an entrepreneur, what I would call building blocks. So a building block is a small example that you have data on that if you continue to replicate, your company will grow quickly. For example, let's say you're a company that's driven by a sales force. You know how much it costs to hire a salesperson. You know how long it takes each salesperson to get to productivity and how much they can sell at productivity. You probably know the average turnover of your sales force. If you understand how much each average sales rep can produce, then you can hire more and more of them, and you can understand how quickly your business can grow. If it's online marketing, it's a little bit different. It's the cost to acquire through different online channels, your CPA through paid search, the volume that's attainable through search engine optimization. If you can show people a credible way that you can grow from your current size to 10 times your size, that will greatly increase your credibility and your valuation with them. So showing people that you can grow quickly and credibly is very important. Last thing I would say that investors look for is an exit. Investors invest to make money, and the first half is putting money in, the second half is getting money out. It's very useful to talk through with them very clearly so you have the same set of expectations. Excuse me. What an exit will look like. Maybe it will be cash dividends. Maybe in some countries, like Brazil is very fortunate. There's a very active equity capital market. If your company is big enough, you can have an IPO, and that's often one of the highest value exits. If you do the reverse math and think what an investor wants most simply, they want to put X dollars in and get a multiple of X out that's hopefully above 3 or 5X. And for the risk they're taking, generally they won't invest if it's less than that. For businesses that are cash dividend businesses, it can be lower, but I think it's very important to be clear what you expect an exit to be. And sometimes companies get acquired for high multiples. Something that's true of startups that's useful to keep in mind is they're generally bought rather than sold, meaning it's often very hard to sell a startup if you want to. Sometimes you're fortunate and you're able to do that. You can create an auction process, but it's a hard thing to count on. And more often than not, you build a great company and acquirers start coming to you, and it's a little bit unexpected. But I think it's always valuable as an entrepreneur to just talk very openly with potential investors about what your exit will be. So, another subject that's worth touching on, what should you look for in an investor? Because this is a two-way marriage, and you want to make sure that you get the right investor. And I can see the capital markets in Brazil, Latin America, and many of the countries that Endeavor is operating in becoming more and more competitive so that you'll have more and more choices. The first thing and the most important thing, as I said, is trust. You're going to be in business with your investor for a long time. You want to make sure it's someone you really like to work with, someone you trust, someone who will always, you think, treat you fairly. You may disagree, and in fact, you want that. You want someone who is smart and who will disagree, but you want trust. That's very important. A very valuable way to understand how and if you can trust a potential investor is to talk to the entrepreneurs, the other entrepreneurs that they've worked with before. If someone were thinking about investing in my company, I would call up all of the other entrepreneurs they've worked with and say, what do you think of this guy? Are they good? How have they added value? Do you trust them? What's gone right? What's gone wrong? How have they acted? So I think trust is very important. The second thing is an ability to add value. I think it's a very fair question when you're raising money to just ask an investor, and you know, I wouldn't make this your first question, but I would definitely include it in the conversation. How can you help me? Do you have networks in this industry that are relevant? Can you help me hire the right kind of management team? Can you help introduce me to customers? How can you help me? A third thing that I would recommend that entrepreneurs look for in investors is someone who knows what they're doing. Someone who has ideally been successful before. Sometimes in new markets where there aren't a lot of venture capital firms, you'll get a lot of new investors, and maybe they haven't been successful before. But if they haven't been successful in investing, you want someone who's been successful in business. It's fascinating in the United States where there is a significant overabundance of venture capital. There is probably 2x too much venture capital in the market, and it's a bit of an overhang from the bubble in the 1990s. I think the market will contract greatly. I would say maybe 2/3 of venture capitalists have never made money before. And it's a very reasonable question for an entrepreneur to say, hey, have you been successful at this before? And I think it's a fair question anywhere. So you want to work with someone who you think can be successful. And again, the last thing I'd say is I would just come back to the point, it's so tempting in raising money to just look at valuation. It's quantifiable. It's sort of a measure of what you've done and of your worth. It's very important. but I would not consider it the most important thing in raising money. You want to get the right partner, someone who's going to add a lot of value, and someone who you'd like to work with ideally again and again over multiple companies. Last thing I'd like to talk briefly about, just because I thought it might be interesting, is what does venture capital look like in the United States? It's very different, but I think it's interesting to understand. I think many of you may understand how it works quite well already. But I think it may give you some insights into how some of these markets are changing, and the US has a lot of excesses that hopefully you, well actually as an entrepreneur, some of the excesses are quite good. Having too much venture capital is one of them. But in the United States, money has become a commodity in venture capital and private equity. There's too much money in both asset classes. In most asset classes in the United States, there's too much money. And what that means is competition is 100%, well, I'd say maybe 75% on the basis of value add, maybe 25% on the basis of valuation. And this is particularly, the earlier stage you get, the more the competition is on the basis of value add. If you look at the hottest companies, the Googles, hopefully Gilt will be one of these, the Facebooks, companies that just do astonishingly well, they can take money from anyone, from a new venture capital firm to a very wealthy Russian billionaire. And who do they take money from and why? They almost always take money from the people that they think can add the most value. And that person has to have a reasonable valuation, but it need not be a crazy valuation. It's generally not the highest valuation. That's how competition for the best deals works in the United States. Another thing, for those of you starting venture capital firms here, which I applaud, and by the way, I can feel the potential of Brazil, of a lot of the markets that Endeavor is in. If I didn't have the day job I currently have, I'd probably be starting a fund in some of these companies. I think Endeavor has done a great job in search and selection, bringing together some of the best entrepreneurs. And so I think it's a very right moment. And if it doesn't feel like everybody's rushing in all at once, that's generally the best time to invest, because when that happens, it's a little bit too late. But I think if another thing that would be very important to look for as an investor in an early market is, as I said before, someone who's been successful multiple times. In the United States, what's often looked for and what makes venture capital firms most successful is working with entrepreneurs multiple times. Entrepreneurs who have been very successful, of all the choices in the world, who you've done such a good job for as a venture capitalist that they want to work with you again and again and again. And they tell their friends, you know, this firm has done such a great job, you should work with them. I've had a lot of experiences with venture capital firms. These are the people that I would recommend. So for those of you starting venture capital firms, I would say consider that your goal, not just making money on a given investment, but making sure that the entrepreneurs that you work with want to work with you many, many times again, because that's the network effect in venture capital. If you don't do that, you won't do well in the long term. If your entrepreneurs love you and they want to work with you again and again, that's how you'll be most successful. Very last thing I'd say is, having been involved with Endeavor for about 6 or 7 years now, and seeing the changes that are going on in a lot of these markets, I feel very bullish as if I were an investor, a seed investor, a private equity investor, a venture capital investor in a lot of these markets. And as I said before, if it feels like as an entrepreneur there aren't enough venture capitalists, as a venture capital firm, there aren't enough exits to point to, that's generally the very best time to get started. If you look in China, if you look in some of the other countries that have taken off in venture capital, the people, the entrepreneurs, and the venture capital firms that have done the best were those who were there early. So anyway, that's a big download of a lot of information. Let me stop there, and if anyone has any questions, I'd be delighted to answer them. One question in the back.
Dick, how would you go about investing in emerging markets, in Latin America specifically? If you wanted to start a fund or co-invest, what would your vehicle be if you saw tons of opportunity in Brazil and wanted to invest in more?
If I were to start a venture capital firm in Brazil, so one of the tricks of venture capital is there's always a shortcut, and the shortcut is always finding the smartest person in a certain area. I would want to find the smartest, most connected people in the Brazilian entrepreneurial community. Endeavor has almost all of them as a part of it. So I would form a very close alliance with Endeavor. I would seek to help Endeavor in a variety of different ways. I'd seek to help Endeavor entrepreneurs.